Hello, this is Matt on the Moon Lambo channel coming at you with a hot XRP community member highlight. And please believe me when I say you're going to want to stick around for the entirety of this thread. There's an XRP community member named Digital Asset Space. And he wrote this piece here. Let me go ahead and pull this up. And it's titled Cryptocurrency Investing Risk vs. Reward. And after I first read this thing, I was like, holy moly, this is like 100% in line with exactly the way that I'm viewing everything that I'm doing as it pertains to investing in XRP. Really insightful, really gets the big picture here, ends up citing specifically XRP in here, not surprisingly. I mean, of course, and by the way, come on, Moon Lambo channel, this is an XRP-centric channel. But I wanted to give a shout out to Digital Asset Space here who wrote this. And he tagged me along with some others in the XRP community. And you know what? Actually, before I forget, I'm going to make sure to follow this individual. This is good. And if you want a good follow, like this is just my opinion right here, because this is a blogger right here. It's at Digital Space. I'm sorry, I said that wrong. At Digital Asset Space on Twitter, and you can find him right there. And he ultimately wrote this in response to something from Digital Asset News, a different account. They wrote, thanks for your kind words. More than happy for my content to be used in YouTube videos. Keenly following the great content created by those I have tagged. More blog posts coming out soon. And I don't know if you can hear that. If you hear a howling in the background, my dog, my little pet peeve, little terrier mix, she is dreaming right now. She is asleep right behind me, and I'm so sorry if that got picked up. It just was out of nowhere, but it'd be weird if I didn't address that if it got picked up, so I better just acknowledge it. My dog's making weird howling sounds while asleep. Anyway, so this is an absolutely fantastic piece. I'm really looking forward to covering this with you. I want to give one more quick shout out before I dig in any further, though. This is from Mumulove, who wrote, literally just signed up for Twitter for the content on crypto, and hands down, best decision I've made other than subscribing to Moon Lambo. You are making me blush. Oh, look at that. That's too kind. But anyway, no, thank you very much. That's very kind of you. I appreciate that you're following. And a shout out to you, good sir. So let's go ahead and dig into this piece before it goes any further here. A look at why the high risk associated with investing in Bitcoin and other cryptocurrencies actually provides a fantastic buying opportunity. Now, I will say this also. I end the video, every single video, stating, hey, not a financial advisor, don't buy or sell because of me. And I'm going to do that again. But I need to state this right now because we're talking about, just concepts as it pertains to how to allocate personal funds. I am not telling you what to do. I am not advising you on what to do. I don't have a financial background. I'm an enthusiastic member of the XRP community. I have to state that outright. I'm sorry so many of you already know that. But look, it would be a disservice, not just to myself, but to everybody listening if I wasn't really diligent about this. So I'm sorry if it's annoying, but I really would feel wrong not highlighting this in every video, especially when we're talking about content like this. So don't buy or sell because of me. Super bad idea. Get actual financial advice from somebody that does that for a living if you want help. Okay. Investing hard-earned cash into any cryptocurrency can be a daunting process. Once you have figured out how to actually buy it, that is. You then have to seemingly watch the value of your investment swing day to day in moves that make the 2008 stock market crash look like a mild dip on a weekly graph. For the above reasoning, many state investing in cryptocurrency is purely a gamble. It is something you can invest in, come back 6 months later, and find that you have lost more than half of your portfolio value. Just look at the image below, and you can see that. It's a Bitcoin price and then highlighting a 6-month period there. All right, the cryptocurrency market is so young, at barely a decade old. People forget that the reason for the large swings is because there's not much money in it yet. This means that people with a few $1 million can influence the price action, particularly for the smaller market cap coins, for more than they ever could in other markets such as the stock market. Absolutely, and that's why I always talk about just the concept of whales manipulating things. Absolutely. For the smallest cap coins, it's easier. It's harder for XRP, but I'll tell you what, even with Bitcoin being the largest in the crypto asset class in terms of market cap, it's still manipulated. And even if it's not literally coordinated, you can see whales acting in tandem. And maybe it is coordinated. I don't know. I don't have evidence. I don't want to speculate too insanely. I'm just talking about the concept of it. All right. And now here's a quote. Check this out. Every market has to start somewhere. What we are witnessing is the rise of the digital asset class. The dot-com boom and bust cycle occurred at the end of the 20th century. It was only after this that the internet companies providing real value and business use cases emerged as the winners. 20 years on, and the likes of Google and Amazon are now clear frontrunners, but back in the early 2000s, the market was that of pure fear and capitulation. Now, there's a little chart on the screen for those of you driving. Don't you worry about it. You keep your hands on the wheel at 10 and 2. Be a responsible motorist. But you can see from October of 1998, the price of Amazon, so that's the early adopter stage, $15. Now, less than a year later, April of 1999, less than a year later, closer to half a year right there, in the speculative bubble stage of life cycle, $95. So it went in about half a year from $15 to $95. Then, fast forward to September of 2001, capitulation stage, giving up, surrender, white flag, $6. So it went from $15 to $95 to $6. But then fast forward to July of 2019, and the price, about $2,000. Stage of life cycle, utility, and real-world value recognized. What do you think? Utility matters. Actual use. It is our view that we haven't even had the speculative bubble phase in the cryptocurrency market yet. This would be the dot-com equivalent of April 1999. The reason being due to these leading factors, and there's two listed. Number one, we still see over 2,000 cryptocurrencies. Once the bubble really pops, all the scam coins and those without utility will be wiped to zero. And as I'm reading this, I'm like, oh my god, yes, this is exactly what I've cited this concept on my channel. I don't know how many times. It's like somebody is getting this. So I was reading this like, yes, Moon Lambo on board. Number two, the institutional money is largely sitting on the sidelines waiting to get in due to lack of regulatory clarity in the space. Ding, ding, ding. Again, another thing that I've absolutely been talking about. Now, some is entering slowly but surely, but I think that the more time passes, the more you're going to see institutional entities, jump in. And I still think it's going to be fractions of a percent of assets to start. But as time passes, it's going to become crystal clear, and I already know this. To me, it's a matter of fact type of thing. But it's going to become more obvious as time passes that this asset class isn't going to go away, and then people are going to have to figure out and acknowledge the reasons why. And it's because business models, and this is just one of the reasons, but business models that exist today, some of them utilizing cryptocurrencies, XRP, could not exist without them. Of course, there should be an open market value. Could not be more obvious, but most people have no clue this exists, and even fewer that find out it exists are able to figure that out or even do the research so that they could potentially figure it out. What an opportunity. That's why I feel like I really stumbled upon something, and I'm willing to bet many of you listening feel the same way. Anyway, it continues here. A lot of comparisons have been drawn that currently we are around what the internet era was in 1995. This makes sense, also explaining the large fluctuations we see in prices on a day-to-day basis. However, this would also imply the capitulation in prices we are seeing in today's market is actually just a small bump in the road. We expect that later down the line, the real bubble will rise and pop. Did you guys hear that? Let me read that again because I've been citing this concept and somebody else came up with it on their own and said the same thing. Let me reread that sentence and then I'll continue with the rest of it. But I am absolutely on board with this concept. We expect that later down the line, the real bubble will rise and pop before the best projects emerge with mind-blowing valuations that we cannot begin to imagine as realistic in today's world. There is no certainty by any means, but if the dot-com era is anything to go by, this could be a very interesting couple decades ahead for cryptocurrencies. Exactly. There's a reason that I've cited that on more than one occasion, that concept. Absolutely. There's still liquidity with some of these coins, and I understand there's not much liquidity, relatively speaking, within the entire crypto asset class, but these projects just aren't dead. People haven't figured them out exactly where this whole thing's going. And so, of course, to me, it makes complete sense that there will be at least one more big bubble before it pops. Now, I don't know for sure that will be the case, and if it's not, fine. I'm just trying to think through it from a critical perspective, and I'm thinking, just looking at what's actually happening in the real world, to me that sounds pretty gosh darn reasonable, right? It's probably going to rise, and it's probably going to pop, and at some point, real reason is going to enter the world of this, as it pertains to investing in this asset class. And utility will matter most. That will be paramount. And again, none of this financial advice, just share my opinion. And then it continues. Here's a subheading: risk worth the reward? ? You don't have to understand the technical aspects of blockchain to know with a little bit of research there is huge potential. Multinational corporations and governments are very much now in the game. All prices right now are driven by speculation. What happens when the utility stage kicks in? Think of it this way. Even if you knew there was an 80% chance cryptocurrencies were all going to zero, which is highly unlikely at this point, and your investments going up in flames, it would still be worth the risk. Why? Because of the significant upside potential. If the doomsday scenario doesn't play out, cryptocurrencies will continue to advance in terms of adoption and technology, as an increasing number of developers and highly regarded employees move into the fintech industry. If they continue on the path they are on fundamentally, eventually price action will follow as mass adoption takes place. The only real question is, do you have the patience to wait? Taking XRP as an example, which has the third highest market capitalization in the crypto market, XRP has reached around $3.50 at the start of 2018 off of speculation hype. If you stop and think about it for a minute, you will realize if it reached this price before it has any utility, and at this point, he writes in parentheses, at this point, XRapid / on-demand liquidity was not even launched, and then it continues, what would an institutional FOMO, fear of missing out, look like? And better yet, what would global adoption accompanied with FOMO look like? Yes, if you think a 10 times of this all-time high with an XRP price of $35 seems impossible, read this paragraph again and think about it. And it's not absurd. It's absolutely not absurd. And some people like to cite market cap. I'm not going to get into in this video, but the net inflow of cash necessary to get a market cap into the trillions of dollars is nowhere near trillions of dollars, actual dollars needing to flow in. Nowhere near that. And there's a subheading here. We don't need a mass adoption event. Check this out. This is one of my favorite pieces that I've read, like in crypto. I really enjoy this one. Only a fraction of the population know about the Bitcoin, and even fewer understand it. The idea is that, as with the internet, eventually we will see mass adoption. Here's a quote. One day, everyone didn't just wake up with a mobile phone in their pocket, but it did happen in a relatively short period of time. Cryptos may not see a specific mass adoption event, but the sector is being integrated into business globally, so one day you might wake up and think, when did this all happen? So well said. That is so well said. And then it continues. We don't necessarily require a specific mass adoption event to make risk versus reward worth it, thanks to the opportunity the current bear market has provided. The market has already proven it can go up multiple times off of nothing but speculation. I've made that point so many times. This writer, I love this writer. Oh my God, I think I have a crush on this writer. Don't tell Moonbay. Anyway, we have now seen a decline of over 95% for many cryptocurrencies, representing a 20 times opportunity just to return to all-time highs. And here's another quote. An investment can only go down 100%, but the question really is, how much upside potential does it have? And yes, down 100%, but only if you didn't take a loan, in which case if you factor in the interest rate for the loan, maybe it could be worse than 100%. I'm just saying. Anyway, it wraps up by stating this. The investment decisions ultimately sit with you, but you should sit back and appreciate the bigger picture of what is unfolding. This nascent market is growing exponentially and in a similar fashion to that of the last technological megacycle, the dot-com era. If there is a reasonable chance a similar outcome will occur 20 years down the line, then the risk versus reward really is a no-brainer, assuming you only invest what you can afford to lose. And again, that's it for this. It wraps up right there. I don't want this to go too long, but I think that I spoke a little bit in my own opinions, but it mostly speaks for itself, to be honest. That's it for this video. I'm not a financial advisor. Do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo!